Hello friends, welcome to my new video. Today we are going to solve May 2017 question number 1 to 10. Let's start. Number 1. Which document should a business issue on receipt of returned goods? Option A. Credit note, B. Debit note, C. Purchase invoice, D. Receipt. The answer is A. Credit note. When a business sells goods, it issues a sales invoice, and when a business purchases goods, it receives sales invoice from creditors or suppliers. In case of returning goods, the opposite happens. When a business returns goods to its creditors or suppliers, it receives credit note. When a business sells goods and when the same business returns goods to its suppliers or creditors, the goods are issued by the business in both the cases. But when it's selling goods to its customers, it issues sales invoice, and when it is issuing or returning goods to its suppliers or creditors, it receives credit note. And when a business receives goods from its customers, it issues credit note. When a business purchases goods from its suppliers or creditors, and when the same business is receiving the return goods from its customers, in both the cases the business is actually receiving goods, but while purchasing they receive sales invoice, and when they receive goods from their customers they issue credit note. Clear? So in this case the business is receiving goods from its customers, so that's why it issue credit note. Next, number 2. Which type of accounts are found in the purchase ledger? Option A. Creditors, B. Debtors, C. Purchases, D. Sales. The answer is A. Creditors. The purchase ledger is frequently known as accounts payable or supplier accounts in accounting. In other words, a purchase ledger is your record of your purchases and expenses, whether or not you have paid them and how much you still owe. As purchase ledger means accounts payable account or supplier account, so it means that creditor is a part of purchase ledger. Clear? Next. Number 3. Bad debts written off would be entered in which book of original entry? Option A. Cash book, B. Journal, C. Purchases book, D. Sales book. The answer is B. Journal. Here I have given the entire information regarding books of original entry in 3 different sections. The first section means the types of books of original entry. The second section means what kind of transactions are being recorded in these books of original entry, and the third section means what kind of source document is used to record these transactions. So let's start. Number 1 is sales day book. Here the credit sales of inventory, these transactions are recorded in this day book, and the source document is sales invoice. The second one is purchases day book. In this day book, credit purchases of inventory, these kind of transactions are recorded, and the source document is purchases invoice. The third one is cash book. In this book of original entry, all cash and bank transactions, for example cash sales, receipts from debtors, in short accounts receivables, payment to creditors, these kind of transactions are recorded, and the source documents are bank deposit and withdrawal slips, checks, debit and credit card receipts, and many more. The fourth one is written inwards journal. In this book of original entry, goods written by customers, these transactions are recorded, and to record this transaction credit note is sent. So for this transaction credit note is the source document. The fifth book of original entry is return outwards journal. In this book of original entry, goods returned to suppliers, these kind of transactions are recorded, and to record this transaction credit note is used as source document. The sixth one is petty cash book. In this book of original entry, all cash transactions of a small value are recorded, and to record these transactions petty cash vouchers, cash bills, etc. are used as source document. The last one is general journal. In this book of original entry, all transactions which cannot be recorded in any other book of original entry is recorded, and to record this transaction bills, receipts, vouchers, cancelled checks, bad debts, etc. are used as source document. Clear? If you have any problem, please comment in my comment box. I will definitely reply to it. Next, number 4. Where is the balance of the bad debts account transferred to at the end of the year? Option A. Profit and loss account. B. Purchases ledger control account. C. Sales ledger control account. D. Trading account. The answer is profit and loss account. Because it is an expense, that's why it must be transferred to profit and loss account. Next, number 5. Which is not recorded on the debit side of a purchase ledger control account? Option A. Discount received. B. Interest charge. C. Returns outwards. D. Sales ledger set-offs. The answer of this question is B. Interest charge, because it is not an item of purchases ledger control account. The other three are items of purchase ledger control account, but this one is not. Clear? Next, number 6. A business decides to include the cost of small items of office equipment as expenses in the profit and loss account. Which accounting concept is being applied? Option A. Accruals. B. Business entity. C. Materiality. D. Prudence. The answer of this question is materiality concept. In this question, the cost of small items of office equipment is included as expenses in the profit and loss account because the management of the business think it is logical to do so instead of showing it as an asset in the balance sheet. The transaction whose nature or material indicates where to charge or to incur, those transactions relate to material concept. If you have any question regarding this matter, please comment in my comment box. I will definitely answer to your question. Clear? Next, number 7. In a manufacturing business, which of the following is a factory overhead? Option A. Carriage inwards on raw materials. B. Factory supervisor's salary. C. Hiring of special machinery. D. Manufacturing wages. The answer of this question is B. Factory supervisor's salary. Factory overhead is a kind of total cost involved in operating all production facilities of a manufacturing business that cannot be traced directly to a product. So factory supervisor's salary is one of them. That's why the answer of this question is factory supervisor's salary. Clear? Next, number 8. A manufacturing company provided the following information: closing work in progress £3,300, factory overheads £83,000, opening work in progress £2,600, prime cost £121,000. What was the production cost? Option A. £203,300. B. £204,000. C. £204,700. D. £209,900. The answer of this question is A. £203,300. How did we got this value? I have shown the calculation here. First of all, the prime cost. The prime cost of this business is 121,000. Second, factory overhead, that is 83,000. After adding these two, we need to add opening work in progress with the sum of these two, and then we need to subtract closing work in progress, that is 3,300 pounds. Finally, we got the production cost 203,300 pounds. Clear? Next, number 9. How is interest on drawings treated in the final accounts of a partnership? Options: A. Account to be debited, appropriation. Account to be credited, current. B. Account to be debited, current. Account to be credited, appropriation. C. Account to be debited, current. Account to be credited, profit and loss. D. Account to be debited, profit and loss. Account to be credited, current. The answer of this question is B. Account to be debited, current, and account to be credited, appropriation. Because partner will have to pay this to the business, and it is an income for the partnership business. Because interest on drawings is that amount which the business charge from the partners on the drawings which they withdraw from the partnership business. That's why it is an income for the partnership business, and incomes are always charged to appropriation account as credit in partnership business. Secondly, it is a liability for the partner. The partner will have to pay this amount to the partnership business. So the figures which the partner owe to the partnership business are shown in current account on debit side. That's why this figure will be recorded on the debit side of the current account. Clear? Next, number 10. Tom and Jerry are in partnership sharing profits and losses in the ratio of 3:1. Their Partnership provides a salary for Tom of £5,000 per annum. During the year, their net profit was £25,000. What would Tom's share of profit be? Option A, £10,000, B, £12,000, C, £12,500, D, £18,000. The answer of this question is B, £12,000. How did we got this value? I have shown the calculation here. First of all, the net profit. The net profit of this question was £25,000. We need to deduct the salary of Tom, that is £5,000. So we got the divisible profit, that is £20,000. As we know the profit and loss sharing ratio for Tom and JD, so we can calculate that Tom will get £12,000 out of 20,000 and JD will get £8,000 out of 20,000. If you want, you can calculate it again. The answer will be same. Okay. If you like my video, please share with your friends and family, like my Facebook page, subscribe my YouTube channel, and don't forget to press the bell icon so that you can receive notifications about my latest videos. Thanks for watching. Bye bye.